see the market breadth as well as the market movement as of now? Because on the index level, what we are seeing today is purely an expiry play. And do you believe that the longer term trend, which is a bull run, of course, is there, and we are looking out for good gains there?
Thank you for hosting me. Our view is that we are going to see moderate gains, especially in the larger cap space in this calendar year. We have a Nifty target of 24,000, which is about a 9% upside from current levels. We've also additionally said that in the first quarter you will see volatility. So days like this will happen because we entered the quarter with a very strong run up in the October-December quarter before this. And therefore, you're going to see a little bit of volatility and sideways movement in the broader indices in the first part of the year. Most of this 9% return will be bunched towards the middle of the year, between April and September, when we have multiple triggers. You will see the election results, you're going to see the budget by the new government in July, and we are still penciling in a rate cut in sometime in that period as well. So all of this will come and they will, the returns will start to peter out towards the end of the year. So we're not surprised that we're seeing a little bit of volatility in the first quarter. That's broadly what we expected. We remain constructive and positive on the broader markets in India, but we think most of the returns will come after April.
Okay, thank you so much for giving your take. So 24,000 is the year-end target coming in for Nifty 50. But Seshadri, what I can say is that you remain underweight on the IT space. Just a couple of days back, we had some brokerages which are still bullish on the IT space and specifically willing to be with the leaders. How do you see the construct of the IT space as of now? Because just in the last earnings, we have seen a lot of stocks and the analysts getting back to their confidence levels in the IT space, that maybe it's the time to accumulate the IT space. But what is your rationale? Why do you still remain to be underweight in the sector?
Yeah, so ITs, one has to look at it in two parts. The first is fundamentals. IT is going through a cyclical downturn at the moment, but we expect that if the US economy stays strong and or if there are rate cuts in the middle of the year by the Fed, you will see a recovery in the overall growth dynamics for IT towards the end of the year. That is, we are not too worried about the current cyclical downturn. However, we've seen, especially in the post-COVID period, that most of the money in IT is made when the valuations change. The long-term compounding of earnings in that sector is not particularly exciting. It's a great sector. It's growing very well. It throws out a lot of cash. But you make money when the valuation change. So, we will be overweight IT when valuations revert back to our side, when the large caps maybe touch the low 20s or even below. But otherwise, we think that what will happen is that sure fundamentals will turn around, but the stocks have already discounted that by valuations getting pushed up towards the end of calendar 23. And, stock performance will remain a little anemic, which underpins our underweight IT call at this level.
Yes, thank you so much for that, Mr. Sen. But lastly, since 24,000 is what you're eyeing for Nifty 50, so if I may ask that, which sectors do you believe that will lead Nifty to those levels? Which sectors are you still bullish on?
The two sectors that we really like are, we think this is a manufacturing-led cycle for India. So by and large, we think manufacturing will outperform services. And within that, we are industrials and industrials, consumer discretionary, and materials are three sectors that we like. Consumer discretionary, especially since I think autos and auto ancillaries are almost 60% of that sector, if you look at Nifty, if I remember right. And that is one area overall that we like, autos and auto ancillary, that will lead. And industrials and the materials is the other way to play the manufacturing cycle. We think that services like financial services and IT will lag this bull market. We've already seen some of that happen, and that will continue in the medium term.
Right, with this, we'll let you go on that. Thank you so much, Mr. Sen, for joining us today on ET Now and helping with your view on the
Thank you for
markets and the
hosting.